Yeah. Let's start with the session. So actually now I will just talk about the breakouts, né? But just to warm up, just because you took some few days without the sessions, I'll just quickly go back because that's how we support. That's the things that you're going to do every day.
Okay. Can you please share your screen?
Oh, sorry, man. Sorry.
Thank you.
I always forget. I don't know. I think now you can see it, maybe.
Okay. Yeah, no, it's opening. Yes, I can see now.
Okay. So what I see, what we are going to talk about now, we are going to talk about the breakout. But before we go on the breakout, I will just try to refresh your mind on how we approach the market. And I know it's quite simple. So firstly, as you know, we did cover everything. We are going to go on 4-hour time frame, from 4-hour time frame to 1 hour. On this 1 hour, we all going to end up with 15 minutes time frame. So this is the method that we're going to use. And if you follow this every day, this is just going to make your job way too easier. So on this, you can easily see that on 4 hours time frame, it's where we're going to identify the trend. Once we identified the trend, we're going to draw those trend lines, whether resistance or support. And you know very well that if you found an uptrend on 4 hours time frame, when you go on 1 hour, we are still on that uptrend. So you don't really get uptrend on 4 hours time frame, and when you go on 15 minutes or any time frame, you'll find that maybe now it's a downtrend or something. Nope, we still continue with what we got on our bigger time frame. So on an uptrend, we only look for buy, and on a downtrend, we only look for a sell. So when we go on 1 hour, on 1 hour, we're just going to identify the structures that we get or that we find inside our trends, whether it's an uptrend or a downtrend. Most likely it's going to be a horizontal structure that we're trying to find, or if it's a downtrend, a continuation of that trend on a diagonal structure. If it's an uptrend, it's going to be something like this, which means it's a diagonal structure. So once we identified this on 1 hour, actually our job is quite simple, and also our 15 minutes is where we're going to look for entries. So if we are on a downtrend, so let's say I already drawn everything on 1 hour. If I drawn anything on 1 hour, let's say we come in from 1 hour to 4 hours, sorry, from 4 hours time frame to 1 hour. So on my 1 hour, I start to see that, okay, sorry, before that, we know that this is an uptrend. This market is an uptrend. If you already know how to draw the trend lines, but I think that we'll cover that when we share the screen. I think now I want to know. So let's say we drawn this on 1 hour. So what do we do from this 1 hour? We know that we are on an uptrend, so we look for buy positions. So which means on these buy positions, we only look for buy when the market is on a support area. When the market reaches the support area, it's where we look for our buy. Once the market bounces back there, it's where we look for a buy. So what happens on the resistance? If maybe we are on an uptrend, once the market breaks that resistance also, we also jump on this buy. We also jump on that buy. So that's how we're going to do our thing. But this is going to be on 15 minutes time frame where you are going to take your buy. So on 15 minutes, everything is going to be way too closer. So you're not going to have any issue. You're not going to have any issue maybe entering late or entering too early. So on 15 minutes, you're going to have this type of a structure. So which means you're going to have something like this. You're going to enter a little bit above that. A little bit above this area. You can see this area. There it's where you're going to enter. Like once the market bounces back, your order it's supposed to be ready. So another one I see it's here. Once the market bounces above that resist, that support, our order is going to be ready to be taken. Even here, you were just going to jump on that. I see the other one here also, you were going to buy. But we don't buy here. We don't buy on top of the support area, because there is a chance that the market can continue pushing lower. So we wait for the market to bounce back, then our order will be ready. Our order will be ready. So if maybe the market is continuing, obviously we will see when the market breaks our resistance on top. If the market breaks that resistance, we know that, okay, the market seems to be way too stronger. I see here this resistance, we're going to buy above that. Even here, it means above this area, it's a good time for us to look for a buy. We don't look for a retest or something. Why? Because the market is continuing on our trend, you see. So I don't know if maybe on that you need some, before I go on our breakout.
No, what you're saying, I think I understand it. Because
Okay.
we almost went through before, but it's fine. You can just continue. I don't think. But what I noticed you explaining the best for me is we don't buy on a support, and maybe I think also we don't buy on a diagonal trend line. If we have to buy from that position, I mean that position side.
No.
We buy just a little bit on top. If I'm
Yes.
not
Yes.
wrong.
Yeah, that's correct. So like here, like if maybe let's say the market is coming back here, before the market touches this area, we don't just jump and say, oh, the market, no. We wait for it. If it's exactly on the support, we know that there is a chance for the market to push up, but we can't just jump there, because what if the market continues pushing lower? So we don't get in front of the market, but we follow the market. So the market will just make a U-turn there. Once it starts to push the upside, we start to see that, oh, this thing is respecting. Let's get in. Then we get in, then the market pushes up. So it's quite similar to this type of a structure, diagonal or also horizontal. It's just the same. Once the market reaches the support, once it bounces back, we will see that, oh, it's respecting our support, then we jump. So which means we're not going to enter exactly on the support. So even on a downtrend, it's quite similar. So which means if maybe we wanted to sell as we were on a downtrend, we were not going to sell here. We wait for the market to go a little bit lower. Here it's where we're going to get in the market, and the market keeps pushing lower. So if we have a structure like that, every time when the market bounces back, only when the market is getting away, not far, but very closer, after the market gets out there, we will continue taking those trades. Once the market pushes lower, we are going to jump on that market. So we're not going to enter exactly on the resistance or exactly on a support, but we wait for the market to show us that, okay, it's moving in this direction. That's why we continue with this this buy or this sell. So on top of that, I just wanted us to start with a breakout. How is the market breaking out? How to not fall for fake breakouts. We also have things that we call them adjustments. So when the market breaks out, you have to understand this. When the market breaks out happens only on our strategy. Breaks out happens only on a trend. If this is an uptrend, if you identified a trend as this is an uptrend, this is an uptrend. So inside this structure, we don't have breakouts. It's just continuation or reversals. So if the market breaks this support area here, that is called a breakout. Why? What does it break? It breaks the trend. The trend was pushing up. Then now the trend is breaking, so that it's changing this trend. You see? So that's how you're going to do our thing. But if maybe we have something like this, and the market, let's say we are on a support here, and the market breaks here. So that breakout, yes, we can maybe call it breakout, but it's not like maybe a stronger breakout like where the market is changing the trend. Why? Because the rules that we're going to apply on this breakout of a trend, they are not going to apply here. So on this one here, it's just a continuation of that buy. The market is just continuing buying. So the market is just getting out of this resistance, then we keep buying. That's why older books, they used to say there were no breakouts. They were just saying that higher high, higher low, higher high, higher low, higher high. So on that, you will see that there is no breakout. That is just a continuation. And if you check the structures, they are just the same as ours, because ours is just like this. Ours is like, that's how the market moves. So we draw this. So that's how we do ours. But just because in the books they draw it like this, but it's just the same thing. It's just the same thing. I hope you see what I'm trying to explain here. So inside any trend, don't consider, even if we call it breakout, just know that a proper breakout is when the market is breaking our support or our resistance. So the reason behind that, when we say it's a breakout, it means that the market is about to change the trend. The market is trying to change the trend. So there are so many reasons why the market is changing the trend. Maybe the trend has been going up for quite some time. Now the market wants to change the trend. Maybe we have economic news that made that trend to be weaker. Maybe there is something geopolitical news that pushes that trend to go lower, or that means there is weakness in that currency or something like that. So that pushes the market to break our trend, you see. So now let's go on the market. So this is a Nasdaq 100. We had a nice downtrend. So when you draw your trend line correctly, a breakout is just something very, 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 very easy. Very easy to identify, because your trend makes. That's why I force you to understand how to identify the chart, and also to draw those trends lines. So here we had a very nice downtrend. Let's say you already know how to draw the trends lines correctly. You've drawn everything. Here, instead of the market continuing, we see that now the market is getting out. So that, on this structure, we can also go on 4 hours time frame. Why? Because it will just make our job our chart very cleaner. It's not the same as 1 hour or maybe 15 minutes. So here we see that, okay, the market is breaking out to the top. We had a resistance, very strong resistance. The market never tried to break out before. So now the market is breaking out. That is a pure breakout, because we never had anything like that. So after that, the market consolidates a little bit, comes back for a retest. Then after that, the market breaks our resistance, this resistance, and start to push the upside. So I want to tell you something about this ranging structure, or resistance and support. So when the market breaks out, most of the time, when we have a breakout, the market most likely, it will consolidate. The market likes to do something like this. Mostly, every time the market breaks out, it creates this ranging structure. So if maybe the market creates this ranging structure, we have to know that if maybe it's a downtrend like this, we don't have to just jump on the market. We wait for the market to break this resistance before we can start to say, okay, that trend is now confirmed. Now we jump on that. If the market pushes lower, continues with the previous trend, it means this was just an adjustment. So let me show you that on the chart. Sorry, I closed my pencil. Okay, it's fine. So here I have my chart. You can see from a distance that the market was going down. When we reach this area, we see a breakout. If you check that, you can easily draw this resistance here. On the bottom side, you can say maybe it's a support. We see several times where the market was respecting. So let me draw a proper structure then. We're going to have this. And we're going to have that. So now after this breakout, this happens most of the time. So once the market creates this structure, after the market just broke out here, someone can say, yeah, this is a retest, let's buy here. No, we don't do that because sometimes the market can just consolidate here for quite some time before pushing even lower. But for us not to jump on a fake structure or fake breakout, we wait, we make sure that we can easily identify this ranging structure, and we can see that, okay, the market just broke out. Now the market is ranging. It's 1, 2, but the other one broke. So for us to say, just because the market broke out, for us to say we are going to buy or continue with this new trend, which is going to be an uptrend, we have to wait for the market to get out of this resistance before we say, okay, now we can consider this a buy. Because sometimes the market breaks out, this consolidation, I call it, the market is just thinking. If maybe the market is whatever that it was thinking, it's about downtrend, it means the market will push lower. If maybe the market was thinking about bullish, then the market will break that resistance. But if the market is still playing around, there's nothing we can do. We see that it's a breakout, but we don't really jump on that. And that is not really a fake breakout. It's not a fake breakout. So after this, then it's where we can say if the market breaks out, the trend is confirmed. Now we are ready to do what? To look for buy positions. So it's where you're going to do what? Start to draw your support line, identify. So now we're going back. We just repeat the same thing that we did learn before. You see. So let me repeat on that. Let me just go on a different structure. I saw something. Yeah, so now we are on USD Canada. It doesn't really matter which pair, but I just want to show you the breakouts. So here the structure, it was straightforward. The market was going down, very nice. This is a downtrend. So what happened is the market broke out. First thing first, when the market breaks out, it shows you that the market is now trying to do what? To change this trend. To where? Obviously, when the market wants to change from downtrend, it means the market will be pushing to the upside. So which means it's going to be an uptrend. But just because we understand breakouts, we don't really just jump on a buy just because we know what's happening here. We know that when the market breaks out of this structure or this resistance or on this downtrend, it means that it wants to change that trend. It means it's going to be from downtrend to an uptrend. But there are things that we're supposed to check. What are those things? Is this type of a structure, this horizontal structure, is it happening there? If it's happening, it means maybe the market wasn't sure. Maybe the market just wanted to accumulate some cash here so that people lose by buying, then the market can continue selling. But just because now we know, we see if maybe we can get this type of a structure, this ranging. If we get that, it's a bust up. It's like you have to be extra careful because the market might not really continue with that trend. The market might push up, down, up. Instead of the market pushing up, just look what happened. The market is breaking this support. So now our decision is what? Is this market seems to be trying to continue with this downtrend. Which downtrend? The one that we had before. So which means this breakout, it was just an adjustment. Adjustment happens if maybe the market was aggressively selling. Sometimes the market tries to recover again, then the market continues. You see. So here it's what I see. The market was over selling aggressively. Then the market start to push little bit up again, little bit. Then after the market will continue with that downtrend. It's like the market, it was trying to breathe. The market pushes lower, breathe, then go down. It's like the market is running, breathe, running, something like that. So on this structure, if you don't know, obviously for those who don't know, you can easily lose here because once you see a breakout, we were just going to look for that buy. But to find out that sometimes the market doesn't really break out to change the trend. Yes, once the market breaks out, we think about changing the trend, but we know very well that, okay, let's check something first. Is the market continuing pushing up? If not, it means that the market will be consolidating here. And if it consolidates here, it means something is happening. If it breaks this support, it means the market is trying to continue with the previous trend. If the market comes back and break this resistance, it means that is going to be a continuation of that buy. Sometimes if it's a proper bullish, sometimes it doesn't really consolidate like this. We just see that by not even thinking twice. We see the market breaking out, one, boom, then the market pushes up. Then we see here, we don't even think twice. This is just a proper breakout, and already the market is uptrending. So we just have to know where to buy because the market was changing the trend. But if it breaks and it starts to give you this type of a structure, it means the market is not really sure what's happening. Because if the market was breaking, it means it was bullish, it was strong. Then it breaks, then it loses the momentum. So it means something's not really right. So once it breaks, it has to push to the upside. That's how actually the market breakouts are supposed to work. But if it breaks, we see something like this, we have to think twice and see if maybe something is happening. So another one, I think I saw it here. Maybe this will make sense. You will see that it happens most of the time. This is also a downtrend. So the market breaks out. You can see that the market is going down. It was going down. Instead of the market here, instead of the market pushing lower, the market breaks out, which means now the market is trying to do what? To change the trend. But instead of continuing, then the market starts to give us this consolidation structure. You see, and it's after the breakout. So what do? We relax, because mostly when the market is indeed strong, it was just going to break, retest, then push the upside, and it start to continue like that. But this one, it's just consolidating. Why? It means something is not actually aligning with this breakout. So the market is still struggling to push the upside. So at the end of the day, there is a chance that the market can even push lower. So that is going to be an adjustment. The market is just adjusting because it broke out and still continued with our previous trend. But if it's a proper breakout, the market was just going to create a nice structure like that, maybe not really long like this. The market was going to do something like this and break out here and start to push the upside. You see, something like that. That's how the market do its thing. But if you see something like this, just know that the market is thinking or is trying to plan something that will make people to lose. So let's see if maybe I can get something on GBP.
Sorry, man, Kenzo, just a question before you continue. On that more like look consolidation, is it the one that your guys normally call it a fake breakout?
No.
This one? Okay.
No. Right. A fake breakout, it's a... let me show you here on GBP USD. A fake breakout is supposed to be 1 or 2 candlesticks, then the market comes back. Like let's say here we can call this fake breakout. The market pushes up and then comes back very quick. So that is where maybe the market likes to touch your stop loss or something, then the market comes back again. So, but when the market breaks out and stay there for more than a week or two, that is not really a fake breakout. It means the market was planning something. But if the momentum is no longer there, it means the market might then continue with the downtrend. The market might reverse, or if it breaks, it means the market will be changing. Indeed, it will be changing the trend.
Well said. I understand.
Yeah. Let me show you another proper breakout. You will see. So we had a nice downtrend. So after we have a breakout, then the market comes back. So you will see here the market was not even consolidating. The market came back, broke out of that, then the market started to push the upside. But if the market is struggling, it means the market was just going to create a long consolidation here before pushing up or before pushing down. But if maybe that is a stronger trend, the market will just retest once, then the market start to push the upside. You see. So let's see here. I want to get something for you. Oh, another breakout is here. So this is a downtrend structure. It was a downtrend. So here, once you see the breakout, this is a downtrend. So once the market breaks out on this downtrend, we expecting to see what? The market pushing up. Obviously, we know that, oh, the market is about to change the trend. So once the market breaks out here, the market doesn't even think twice. The market start to do what? To push the upside. So you will see that there's no aggressive consolidation structure like what we saw on the other ones. So you will see that, okay, there is a high that the market respected, but later the market did what? The market came back and break out. Once it breaks this support, sorry, this resistance, we know that the market will start to do what? To continue to fly. But if it breaks this support, it means that was weaker, then the market has to push lower. So a fake breakout, so this one is a proper breakout with some retest. A retest, it doesn't really matter where. If it breaks out, as long as maybe we can have a reversal out of that breakout, that it's fine. Like here, you can see the market broke around this area, but the market never touched that. You can see we have a push, come back, push. Our structure here, or our strategy, as long as we break a resistance on this breakout, something like this, you can see that we had something like this. So our job is to wait for a proper breakout on this resistance, then we're gone. Then once we break here, we know that, okay, that means now we're pushing to the upside. Simple as that. So an adjustment is when the market wants to continue with the same trend, but it acts like it's breaking out. Like something like this. So the market creates something like pushing to the upside. Then what happens? The market breaks out. Then instead of the market pushing down, the market just consolidate. Then we draw something like that. Guess what? The market breaks this resistance and start to continue. So which means one way or another, going further, we're going to change this support area and make sure that it touches enough structures. That's why we call it an adjustment. It shows that the trend is continuing with the previous trend. Instead of the market pushing down, the market is coming back again. And this is the most confusing part in the market. But it's not actually a fake breakout. A fake breakout is actually less than 4 candlesticks. Then you know that this one is coming back. So we don't really try to fight that.
Okay. I understand.
Let me try to check another. Let me check some structures. Well, let me just talk about this one here. So once we have a breakout here, I think this one was quite obvious, but on top it created something here, a sort of resistance. Once the market creates that, we know very well that we just have to wait for the market to break the resistance before we say it's a buy. Here at least the market broke out of that, so we confirm this as a buy. So but this first structure, we were just holding, we were not doing anything. So we're just waiting for the market to show us the road. So let me try to check something else.
Sorry, Kenzo.
Yes.
Kenzo. Quick one. Sorry. Can you go back to the one that you just leaving now? I want to ask you something quickly. Sorry.
Okay.
Yeah. All right. Okay. Oh, no, my question was, was it possible for someone to buy from, you see, the second touch from the, what you call, from the breakout there? Would
This
someone
area.
buy there maybe and take profit there on a resistance?
Here.
When you,
Yeah, it's
Was it
actually
five?
possible. It's actually possible, but it's difficult because this area was still very new also. So when we don't
Yeah.
really
Okay.
see
All right.
what happened here, it will be difficult. But
Okay. Yeah.
and it's difficult
Yeah. That's,
because the market already created this. So we have
yes.
to mark
Yeah.
that area. So when we mark that area, we have to know that when the second one comes, will it respect
That's
the
fine.
same level? If it respect, then that it's a cautious. So we need to respect. I mean, we have to be careful because what if the market start to respect this and start to push lower? So it means we
Okay.
just have to mark it, and above that, because this is gonna be our first resistance. Above this resistance, it's where we're gonna continue buying.
Fine. Okay. Thank you.
You see, so yeah. So
Okay.
another way of confirming breakout is to try to check the previous high or the previous resistance or the previous support. So let's go here and maybe we're gonna get it. So when I say previous support or resistance, it's something like mostly the market moves. When the market moves, it creates support, resistance, support, resistance. So we have to see if maybe the market broke out of that. So for example, it's gonna be something like this. If the market pushes like that, it's an uptrend. So we're gonna have something like this. Let's say we have a structure like this. So the market creates this sort of support, you see. Then make sure every time when you do your analysis, make sure that if we say the market broke out, make sure that the market broke out indeed on this current level. Sometimes the market can break here. The market can break here and you start to take decisions, but when you check here, we still have our support very closer. So you have to mark that area, and once the market goes below that area, that might be a continuation. I think I also see that. Let me just show you on the actual chart, it might confuse you. So it's like, let's just go back here. We had an uptrend, a very nice uptrend. Yeah, so we had this uptrend, you know. So before we jump on this, because breakouts they can be tricky. So we see a breakout here around this area. You can see that area. It's where the market broke out here. So, but when you check, we still have this area that it's possible for the market to respect. You can see that. So if the market
Yes.
breaks out here, we have this diagonal structure because we can't just draw a line going through that as we already have this support. So now the market is breaking out. Let me just draw that. The market is breaking out. It's breaking out here on top. But on when we check, we have this area that it's possible. We see that there is a chance for the market to come back around that area and respect. So what do? Do we treat this as a breakout? No, we have to draw this horizontal structure first. And if the market goes below that, it's where we can see now the market is gonna sell. But lucky enough, the market came here. So we're not going to sell from this area. We wait for the market to see if maybe the market is respecting that. Sometimes the market can go through that, but for our sake, we have to check on our left. Every time, check on your left if you have anything closer that can work as a support or resistance. And here we had that. Guess what? The market did come here and respect that. So which means, yes, on top there, it looks like a breakout. So which means we have to actually adjust this structure going further. Then the market pushes up, and it still plays above this support. So which means we don't really have anything to do. So again, the luckiest one, or we were lucky here when the market started to break here. Then this was obvious to say, okay, the market is getting out, so which means the market is now about time to go down, because this is our previous support. So let's see on a resistant. On a resistant is this one here. The market pushes up, but on this one it was obvious because you can see this area. So but on this one the market already broke out. It was not really far, so we can't use this one here. So already the market broke out because it makes sense from a distance. So which means, yeah, the market moved above. Unfortunately, the market is just consolidating, which means once we start to see a consolidation structure, we need to apply our rule to say if the market consolidates after the breakout, especially here it was a downtrend, it means for us to buy, we have to wait for the market to break this resistance. If it was a uptrend, it means we were waiting for the market to break this support area before we think about selling. So I want to get something. Yeah, I think this one makes sense also. Yeah, on a downtrend, we had this structure. We can see we had this, or we can just say this area. That area, it was a previous resistance, horizontal one. On this one, you have to check the horizontal structure. If we have any resistance or support where the market is breaking out. So which means if it's a downtrend, we will wait for the market to break the resistance. If it's a downtrend, it's going to be a support. So here, the market was going down, but at the same time, remember those structures that you're going to draw on 1 hour, they're just going to be there. So you can just say it's a breakout. Let me try to push it further. You will see that, no, this thing here, it's moving out. So which means the market might actually continue pushing to the upside. So sometimes they start like that, start to consolidate and start to push up there. But this one, unfortunately, did aggressively even push lower. Let me check the other one. It might confuse, obviously. Yeah, on this one, I see this one here. If you were able to draw this, you will see, maybe you saw that we had a structure like this before. We had a structure like that. Here we were eating. Did you eat in the group?
No,
Oh.
not yet.
Oh,
I'm not in a group, remember, yet.
Sorry, man. Because we were eating yesterday on these things. So, yeah, so, sorry, man. Here, you can see that we had this nice uptrend, and it makes sense here, on this area. But once we start to have this smaller breakout there, we don't panic. Why? When we look at our left-hand side, do we have something like a support? You will see that, yes, we have that. And we already drawn this on 1 hour. Now it's just that time to extend. It was here. Now, once we see a breakout, we can just extend the closest resistance, sorry, a support, to see if maybe indeed the market will respect this area, as we can see that it was creating something like that to push up, or if it was going to break out. If it breaks out, that was going to be a clean breakout, because we've broken our horizontal support and our diagonal structure. So now if it breaks here, our job was to wait to say, okay, if it breaks, is the market creating a ranging structure? If yes, let's wait for it to break that support, then we continue with that downtrend. If not, it means the market was just going to say, do something like this, continue going down without even consolidating. So this type of horizontal structure can also help us, especially on the breakouts. When the market breaks out, make sure you check on your left and see if maybe there is a closer resistance or support. So let me check it on something else, maybe Euro USD. I don't really see that. Let's see. Here we had this one, did not really make sense. It's fine. So which means we never had any issue there. So, but it doesn't really happen now and then. It's just those things that you need to check. Oh, here the support is here. I mean, the resistance is there. Yeah, okay, I see the other one here. So this was an uptrend. It was AUD USD. So when the market breaks out, you can see that this around this area on your 1 hour, you were going to draw something there. You were going to have stuff like this. And these structures, obviously, you draw them on 1 hour. But once the market breaks out, once the market tries to break out, we were going to say, oh, okay, the market is breaking out here. First thing first, look at your left-hand side and see if maybe there is a support or resistance structure that we need to support. I mean, that the market can support. When we check, we had this. And you don't really have to search for it because obviously this structure, it will be drawn on 1 hour. So you just see that, oh, we have a horizontal structure. So for us to not get into fake breakouts, let's try to expand that. So we can expand that. And I think you can see that the market did break out here, but it was not clear until the market gets out here. Because this area, it's a chance for the market to respect this area and push the upsets. Because sometimes the market won't just break our diagonal structure and say, oh, it's done. No, we have to also check our horizontal structures if maybe they still make sense. And there, they were still valid. Once the market breaks out, then it's given. So we just need to see what we can do. Unfortunately, after we break out on this structure, it's a downtrend, which means we're thinking about what? A downtrend. But after that breakout, the market starts to do what? To consolidate. The same structure that I was talking about. The market starts to consolidate heavily. You see here, it's some serious crazy break or ranging structure. So if the market consolidates after the breakout, it's like the market doesn't really know what to do. The market doesn't really, it doesn't really have the same momentum as before. So what we are going to do is we're just going to wait for the market to break this support or this resistance. If the market breaks this resistance, as we can see now, it means that the market will no longer be on this downtrend. If the market breaks this support, this is just a continuation of a trend. That will be good with us, you see. So that ranging structure, hey, it means a lot in the market. So you're gonna get it like now and then. I thought maybe you wanted to say something.
No, I'm just nodding my head.
Okay.
Yeah.
So you can see that. Yeah, go ahead.
No, because what you're illustrating, I can see. I mean, it's opening my eyes.
Yes, that's great. And this type of ranging, sometimes you might think maybe we just identifying it on 1 hour for no reason, but you'll start to realize that almost everywhere we have this. When the market is about to take a decision, it will create this. When the market is just reversing so that we can keep buying, we also have quite similar structure. Even here, you can see that. Even if we go back, most likely you're going to get the same structures. From here, I can see we also had a support here. On top of there, maybe we had something. Also, I think this one, it was continuing like that. So we have all these structures, and sometimes they might differ with the bigger size and stuff, but when you check, the market is just ranging. Like here, this is a downtrend. Obviously, the market broke out. But just because the market broke out, it doesn't really mean that it's obvious continuation. And most likely, it's where people may lose a lot, because now you will be thinking, hey, let me just sell because the market broke out. It confirmed we have 1, 2, 3. So not as you don't really, if maybe you don't really know, then the market can then continue with that trend. Then our job is to
So,
do what? Is to come back and adjust the trend. You find that, oh, it's even making sense, you see.
so what is better, like on this one that we're in now, what is better is to be, out of the market.
Yes, when the market is consolidating like this, especially on the first breakout, when the market is not really far from the breakout, it's obvious that the market is not really on a stronger move. So we just need to relax. Even if you wanted to trade here, you can see this consolidation. The market was not moving anywhere. You
Okay.
see. So which means every time when the market breaks out, remember we are on breakouts. When the market breaks out, it creates structure like this. We know that
Okay.
something's not right. We just relax. But sometimes when the market breaks out, it just creates something like this. That is, to me, it's a obvious sell, or if it's an uptrend, it was going to be an obvious buy, because we don't really have this aggressive ranging structures, because this might be 2 to 3 weeks. The market has been doing that. You see.
Oh.
Let's check how long is this. From 17. Oh, okay. It's actually, yeah. 16 Jan. Now it's Feb. So yeah, almost 3 weeks.
Oh.
So it means
Oh.
if whether you bought or you sold, it means you were not going to have any proper profit or negative. So the market was going to go, negative, positive, negative, positive. So this is not the how trends move. Trends moves like this. Or even if we get this type of a structure, maybe let's get it when the trend is obvious, to say, okay, maybe around this area it will be obvious to us to say, no, we're still continuing the trend. But when it starts, when the market just broke out, it's a concern, because once the market breaks out, where is the momentum? Because it was supposed to continue, you see. So that's the problem. So I don't know if maybe we can get something different. Let's see. This was a downtrend. So mostly nice downtrends or breakouts. Sorry, not breakouts, not downtrends. When the downtrend is serious, most likely you're not gonna. The market doesn't really think twice. So we had a nice downtrend there. Just look at this at the breakout. It's here. So you can easily see that the market did break out. I can try to squeeze this so that we can see nicely. You can look at your left hand side first to see if maybe we're getting out. At our left hand side, I see something like this. This area was sort of resistant. So if we go closer there, it's a sort of a ranging structure. Let's draw this. Yeah. So I think this one doesn't really matter. The market broke out. On top is fine. So, but on top here, you can see that the market was creating this sort of ranging structure. But not long enough, then the market broke out of that resistance. So this is a pure bullish momentum. And most of the time, the market continues like that. And when we check, indeed, the market started to continue with that uptrend. Then even now, we are on this uptrend. When you check this consolidation, it's not really that aggressive like the ones that we see for 2 weeks, you see. So this is how the market was moving. After the breakout, then the market was gone. So this is simple, straightforward. Let's check the other ones.
So we always treat the line as zone, not as just a line. I can see that.
Yes, yes, yes. I think everywhere here, some of this, they are just simple, very, very simple. Proper breakout doesn't really think twice. The market might try to break, but it will breathe a little bit before jumping. So here we had a nice downtrend until we had this aggressive breakout, but this one just broke out and started to push the upside. So the market pushed the upside. This was obvious, so we never had any resistance that we're supposed to look at. So that is a pure breakout. I don't really see something that is challenging. We did talk about this. I'm trying to find something that this one is the one which is adjusting. Breakout now is going. Okay, this one we did check. Yeah, I think on the breakouts for now, I think that it's enough. I don't think maybe there's something that I had to add, because most of the structures they just make sense. Oh, I see the other one here. I see the other. Oh, this thing. Okay, so we see here. It's AUD what? It's AUD CAD. We can easily see that the market was going. We had a breakout from this area. Instead of the market pushing lower, the market started by consolidation. So we wait. Our first sell was going to be once the market breaks out of this support. So we started selling. Then now the market will be continuing pushing lower, unless if the market pushes up. But this is exactly what we try to show. Mostly the market creates this type of ranging, and once the market does that, you just know that it's not really a good time for me to jump. I know that the market broke out, which means it might continue on this downtrend, but let's make sure that we wait for the market to break the support or the resistance before you think twice. You see, but another thing is, don't forget to check on your left hand side every time. If maybe you have a support that you need, maybe the market might respect, and if you checked that, most likely you're not gonna get it wrong. So yeah, I think for now it's fine. Okay, I see the other one here, GBP AUD. So GBP AUD, you can see that the market just broke out. It's a nice breakout. So, but instead of jumping on the buy, what you can see what's happening there, and it's impossible that why this thing happens on all these markets, because every pair that we checked, mostly the market does that. But when you check, we never had this in a long run here. You see, so it means something. So once the market breaks out, we start to see a consolidation. So which means we just need to think twice, because if we jump on the market, what if it continue selling? So for us to continue selling, we're gonna wait for the market to break that support. Then we're gonna say, okay, that was just an adjustment. The market will continue on that downtrend. If the market breaks this resistance, as we see a nice breakout, we will say, okay, it's time for us to look forward for nice bullish momentum, because the market is breaking the resistance. So which means it's our time now to look for something else. So anyways, for now, I think it's fine, man. I think maybe we can come back and try to cover this again. Oh, sorry, I will have to show you that the trading view before you start to show me. I don't really want to be far from. I want us to be on the same page. So for now, I think it's enough for today.
Yes, it is. It is enough for today. I agree. But can I ask you now, when do you think we can try the trading view? Is it going to be next week only?
Come again?
Oh, my question is, when do you think we can try? You can show me the trading view. Is it going to be only next week?
No, I can show you. If it's problem we have, I thought maybe we're gonna meet later, but we have this load shedding again. I thought maybe we can meet twice. Then we can meet later on. Let me see. Ghana, I said it's 6 or it's what? Let's
You
see.
said 6 to 8.
Let's see. Oh, it's 6 to 8. So I have a class at 8. I agree your class was supposed to be at 7. I got. So,
Yes.
which means, let me see if maybe I will still be stronger around after 8. Then I will be just showing you about trading view. If not later, maybe I'll try to connect with you tomorrow.
Okay. All right. Tomorrow, I'm just going to the bank in the morning. We are going to open, a society account but I want to come back as early as 10. But obviously at 10, it will be a load shedding again. Can we maybe try and think of the same time tomorrow after 12? I'm just saying. I don't know what you.
No, around that time it can be fine. It can be fine. You'll just let me know if maybe, because on weekends these ladies, they just want to go around. So especially when during the week we are always busy.
Okay, no problem. But
But
I'll stand by. I'll let you know.
Yes. Let me know once you're coming back from the bank. Then we will see what we can do.
Okay, thanks so much.
Thanks, man. I will try to send this session later on.
Okay, please.
Thanks, man.
It was a great one as always.
Yeah. Thanks, man.
Thanks. Bye.
Okay, bye.